Hi, I'm Jimmy. In this video, we're looking at answering some questions that I got about my investment portfolio. So I recently did a video on my portfolio if you're curious what stocks I own, and I've made some moves and that led to some questions. So I'm going to go through some of the things that we can do to try to improve our own investment portfolios, how I'm building mine, and mine is it works for my situation, but if your situation is different, I got some thoughts around that as well. So we know that the stock market over the past year has been, this is a year-to-date chart. Over the past year, it's been down a decent amount. Right now, it's down about 23%. So this could be a real problem. So the question is, how could we make our portfolio stronger almost no matter how we've got our portfolio currently set up? Now, before we jump into that, I just want to tell you real quick about a website that we're building where we're creating a platform to analyze and value different stocks. So far, we've already built the discounted cash flow calculator, but the plan is to just keep adding different ways to value different stocks. So at some point, you'll be able to punch in a ticker. When you do, the website will kick back what the best valuation methods are for that particular company and what the stock is worth using each different valuation method. Ideally, we do the research, we see if the stock looks like a good long-term buy and hold, and if it is, the valuation calculator can help us get there even faster. Now, down the road after that, we're going to add financial statements. We're going to add the ability to analyze the companies, listen to conference calls, things like that. We plan on going far with this. And the advantage of signing up now before the website is official is that while it's still in beta version, the advantage of signing up now is that we are locking in the price. So whatever you sign up for today, you come over, you sign up, let's say you sign up for an annual subscription. Well, the price will never go up on you. It'll only be that cost, and we're just going to keep rolling out more and more features. So if you'd like to sign up, I will leave a link in the description below if you're curious. For now, let's jump back to my investment portfolio. Okay, so over the past few months, one of the big changes that I've made to my portfolio is basically I've been averaging down different positions. Just to name a few, I averaged down Intel, I averaged down Google, I averaged down Meta or Facebook, I averaged down Warner Brothers Discovery. I actually added a decent amount to my Warner Brothers Discovery position. Because these companies have fallen, I've continued to average them down. Now, I also have some companies that have gains there have been a positive side for my investment portfolio. I'll come back to these in a minute and sort of what the plans are for me with these particular investments. But basically, what I have done is when you look at the market and what the market has done over the past year, well, I have gradually added more. As the market has fallen, I've gradually invested more money into different stocks. No one stock in particular. It's been a situation by situation basis, and I've just kept adding as the market has fallen because it basically looks like things have gone on sale more now than ever before. So for the reason behind that is my investment portfolio is the number one thing that I'm looking for is I'm looking for long-term buy and hold investment opportunities. What companies am I going to buy today and hold for 5, 10, 20, 30 years? I plan on holding these indefinitely. The key, the way I look for it, when I do my research, the thing I'm looking for is great companies that are selling at a good price. And that the reason I kept buying as the stock market was falling is I thought they were a good price when I first bought them. The market kept falling, so the price kept getting better and better, which is why I have continued to average down. But as was pointed out to me in a few comments on the My Portfolio video, that only works if you have capital to work with. In my case, I am adding capital to my portfolio, but you can only average down if you can add capital. Otherwise, you are sitting in cash. And that brings us to the positions that I have that have been up. For me, I'm adding cash every so often. I'm not really dollar cost averaging. I'm adding cash. And when I do I decide to buy a new position? Do I decide to average down? It's been, I've gone in both directions. If I see a great opportunity, I'll jump in a new position. If I don't, I'm more than happy to average down. But what if I didn't? What if I didn't have the capital? Well, one example is something like Lockheed Martin. We saw Lockheed Martin is up. Lockheed Martin, since I bought it, I paid about $335 or so for my shares, $336 for the shares that I bought. And since then, the stock has done quite well. If I had no additional capital, let's pretend that I have an investment, a retirement portfolio, and I can't add any capital. In fact, I'm living off that. I need to return, and this pullback is really killing me. Well, one thing I probably would have done is I probably would have sold my shares of Lockheed Martin at any point above $400. When it got to about 400, I was like, all right, I think that was about fairly valued for me. And if I had no additional capital coming into the portfolio, the only way to average down is if I would consider selling my stock then. So if my portfolio was set up in a way that I couldn't add additional capital, I would consider which positions, I'm not just selling the winners, I'm selling the ones that look like their run have gone. Now, for me, a long-term investor, Lockheed Martin is the type of company that I'd be happy to own for 30 years. I have no trouble with it. The fact that it will probably underperform over the next year or two because it performed so well over the past year is less of a concern for me, because I'm looking for the 30-year, whatever the trajectory is over the next 20 or 30 years. That's what I'm paying attention to. But if I couldn't add more capital to my portfolio, this probably would have been on the chopping block. The other stock that I have in my portfolio that has been up recently is Activision. Now, Activision I probably would have cut before I cut Lockheed Martin, because Activision, like I said, I got semi-lucky with this one. I bought my shares around $63 per share, and shortly after I bought my shares, the stock had a huge jump. It was up like 25% because it was like 2 or 3 weeks after I bought the shares. Now, I didn't buy the shares because I thought they were going to get bought out. I bought them because, you can't see it on this chart, but shortly before this, the stock was tanking because they were having trouble with management. They were having trouble with how they were treating their employees, and the stock was getting punished because of it. I saw that and said, okay, big picture, opportunity-wise, that looks like it could go, that looks like that could be a long-term opportunity. So I bought it, and then Microsoft announced that they were going to buy it. Stock has a huge jump. Now, I have held on to my shares because Microsoft is supposed to buy the company at about $95 per share. At 95, not about 95, $95 per share. Stock jumped to near in the early in the low 80s initially. I thought about selling that day, but I was like, well, if I'm going to buy it at 95, I'll wait for this thing to go up to 95. Now you can see it's sort of, broadly speaking, it's sort of trended lower since the initial jump, which often happens in a deal. Part of that is people aren't sure whether or not the deal will actually go through. The European Union is trying to block it. There's questions about whether the American government will let the deal go through. Now, even if it doesn't, I'd be happy to hold Activision for a while. I bought it because I thought it was going to be a good company. But if my portfolio, if I could not add additional capital to my portfolio, this one would have been on the chopping block right away. As soon as it had this huge jump, I'm up, 25, 30% coming, a month into the investment. Yes, I would sell out. I would have sold out there and then used that capital to average down some other positions. Now, I probably wouldn't have gotten my final positions to be as good as my average cost is now because I've added additional capital, but they would have been better than they would have been had I not sold these positions. So almost no matter where your investment portfolio is or how you're structuring it, if there are opportunities for us to improve our overall portfolio, who's to say we couldn't? It was up 40%. I couldn't sell 40% of the portfolio, 40% of this position, average down some other ones, because I really believe how we set up our portfolio during this market pullback, huge market pullback, what we do today is going to determine how good our portfolio does over the next 10 or 20 years. If we position it correctly, we could end up really making a killing if we don't jump out too soon when things get a little bit fidgety. Now, if you'd like to sign up to get access to the website so you can value stocks and lock in your price now forever, well, I will leave a link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.